Let's be honest. You didn't click on this video because you're crushing the markets. You clicked on it because you are in pain. You are tired of the cycle. You fund an account. You have a few good days. You feel like you finally cracked the code. And then the spiral begins. One bad trade leads to another. The discipline vanishes. The anger takes over. And before you know it, you're back to square one, staring at a blown account, wondering if the market is rigged against you. I'm here to tell you the truth that no one else will. The market isn't rigged. Your broker isn't hunting your stop loss. The news isn't out to get you. You are the problem. Your strategy isn't why you're losing. You know how to read a chart. You know what support and resistance are. The reason you are part of the 95% of traders who fail is not a lack of technical knowledge. It is a complete lack of psychological control. Until you accept that you are the weakest link in your trading system, you will never be profitable. You will remain a gambler who occasionally gets lucky rather than a professional trader who manages risk. Today, we are going to perform surgery on your trading mindset. It's going to be uncomfortable. I'm going to call out behaviors you are trying to hide. But if you stick with me for the next few minutes, I'm going to give you the psychological framework to stop sabotaging yourself. We need to figure out why your brain turns off the moment real money is on the line. The biggest lie in trading is that if I just find the right strategy, I'll be rich. Think about it. You can give the exact same proven strategy to two different people. Trader A is disciplined, he waits, he executes, he accepts losses as the cost of doing business. He makes money. Trader B, that's you right now, you have the same strategy, but you get bored waiting for the setup, so you take a subpar trade. You lose, you get angry. The next setup comes, but you hesitate because you're scared of losing again. You miss the big move. Now you have fear of missing out. So you chase the price up, buy at the top, and it immediately reverses. Same strategy. Two totally different outcomes. The variable is the human operating the machine. The market is neutral. It doesn't know you exist. It doesn't care if you need to pay rent. It just moves up and down based on liquidity. Every time you click buy or sell, you are holding up a mirror to your own psychology. If you are impatient in life, the market will exploit it. If you have an ego, the market will crush it. If you are greedy, the market will bait you into a trap. Your P and L is not a reflection of your intelligence. It is a reflection of your emotional regulation. So stop looking for new indicators. Stop buying courses on technical analysis. You have enough knowledge. What you lack is self-mastery. Let's break down exactly how your brain betrays you. There are 4 primary psychological flaws that destroy nearly every aspiring trader. As I go through these, I want you to be honest with yourself. Which one is your primary weakness? You sit at your desk. The market is open. Nothing is happening according to your plan. But you feel an itch. You feel the need to be in the game. You see a green candle start shooting up. You don't have a setup, but your brain screams, "It's leaving without me." You click buy. That wasn't a trade. That was a dopamine hit. You are addicted to the action. You aren't trading to make money. You are trading to feel something. Real trading is boring. If you are having fun, you are probably about to lose money. This is the destroyer of accounts. You take a loss. It happens. But instead of accepting it, you take it personally. You feel like the market stole from you. You feel stupid. Your ego gets bruised, and it demands satisfaction. It demands you get that money back right now. So what do? You immediately double your position size on a mediocre setup to win it all back in one shot. You are now trading purely on rage. The market is about to teach you a very expensive lesson about humility. This is the silent killer. You are in a trade, and it goes against you. It hits your mental stop-loss point. But you don't click close. Why? Because as long as the trade is open, there's still hope. Your brain hates realizing a loss because it means admitting you were wrong. So you start bargaining. I'll just give it a little more room. It's due for a bounce. You watch a manageable $50 loss turn into a catastrophic $500 loss, frozen like a deer in headlights, praying for a reversal that never comes. And finally, the opposite problem. You are actually in a good trade. It's moving in your favor. You are up $100. Your target is $300 away, but you start staring at that unrealized profit. You become terrified that the market will take it back. The pain of potentially losing that $100 feels stronger than the joy of potentially making $300. So you panic close, you snatch the small profit, then you watch in horror as the market runs right to your original target without you. You keep cutting your winners short and letting your losers run long. That is a mathematical impossibility for profitability. Why do we do this? Why do intelligent people make such stupid decisions when money is on the line? It's biology. Your brain is not wired to trade financial markets. Your brain is wired to survive in the wilderness. When you are in a drawdown, or when a trade is moving fast against you, your brain perceives it as a literal physical threat to your survival. Money equals safety. Losing money equals danger. In that moment of stress, your amygdala, the lizard brain, the fight-or-flight center, hijacks control. It shuts down your prefrontal cortex, which is the part of your brain responsible for logic, planning, and discipline. When you are emotional, you quite literally cannot think straight. Your IQ drops. You revert to primal instincts. Run away, panic sell, or fight back. Revenge trade. You cannot willpower your way out of biology. You have to build systems that prevent your lizard brain from ever taking the steering wheel. So, how do we fix this? How do we move from the 95% to the 5%? It requires a complete identity shift. You must stop thinking like a gambler trying to hit a jackpot and start thinking like a professional risk manager running a business. Here is the protocol. This is non-negotiable. Rule 1. The circuit breaker. You need hard rules to stop the spiral. If you lose 2 trades in a row today, you are done. Close the charts. Walk away. You are psychologically compromised whether you admit it or not. Live to fight another day. Rule 2. Accept the loss before you enter. Before you click buy, look at your stop loss amount. Say out loud, I am willing to lose this $50 to find out if this trade works. If you cannot accept that loss emotionally, size down until you can. You must be at peace with the worst-case scenario before you enter. Rule 3. Stop watching the P and L. Turn off the setting that shows your unrealized profit and loss in dollars. Switch it to percentages or points. Stop staring at the money fluctuating. Focus only on the chart and executing the plan. Detach from the money. Listen to me. The market doesn't owe you anything. It will take everything you have if you let your emotions run your account. The only thing standing between you and consistent profitability is the discipline to follow your own rules when it feels uncomfortable. Stop self-sabotaging. Take extreme ownership of your actions. Master your mind, and the markets will follow. It's time to grow up and trade like a professional. The choice is yours. Check out this powerful video here to learn more.